Good evening, good evening, good evening. So, here we go. There comes a point in certain services and certain YouTube pages, whether it's football, whether it's sports, whether it's art, whether it's finances. There comes to a certain point where you realize they either know what they're talking about or they don't know what they're talking about. Tonight look like it's going to be probably one of those nights that you might see a little different appreciation in what we do. And we keep you on I'm not even gonna say the right side of the market, but we keep you, how should I say it? We keep you confident because we help your clarity on what to look for and what should you be looking for. And I'm gonna talk about it. And I see some things bubbling underneath that nobody's paying attention to. And this is exactly why we look at multiple canaries or multiple indexes. So when something happens, it doesn't go unidentified. Because a lot of times things happen that you don't see happening if you're not looking at it. And then when you realize it's a problem, it's a major problem. Like we've been talking about golden oil for a long time. I know we just started the channel. We only on episode 4 right now, but behind the scenes with our private group, we've been doing this for some time. So please make sure you subscribe. Make sure you go ahead and join the Discord. We give out an actual report, a full report, with indexes, with canaries, we have 36 stocks that we look at to just see what's going on underneath the bubbling underneath. And you get a full report. It's cool. It comes out every day. It's a clean report, gives you overall view. But let's go ahead and rock out. Let me explain what I'm talking about. Let's get into it. You know how I do it. I talk to you through the charts. There's nothing to even talk about. Whatever I'm talking about, you need to be able to see it on the charts. Let's go ahead and share. All right. So let's go into this work. So now, this is what you got to look at. Here goes the SPY. And let's go through the journey. We came all the way down to this red line right here, which this red line, I'm going to repeat myself. This red line was a level that was a very important level that we watched out for. Even though we closed below the green line, which is the monthly level that I was watching for, the red line, a daily close below the red line would trigger an absolute flush problem. And I'm going to show you to the left. The flush problem was this candle from December 17th of last year. If we get below that candle, there's nothing holding us down. Now, what we did do, we opened, we dropped, and then we rallied all the way back up to create a thing called a daily engulfing bar. Let me repeat that. This is a daily engulfing bar. And on engulfing bars, when you have an engulfing bar, meaning the high and the low is higher than the previous day's high and lower than the previous day low. Okay, so when you have that, the rules are if you get a close above it, you should be going up. If you get a close below it, you should be going down. But anything in between, you got to just wait. Now, remember, I used the word close. Now, there are times you get an open above it, but you got to get an open with a retest and then break back up for you to feel comfortable. But the key word that I said is close. All right. So let's check this out. So now we're looking at a close above or a close below. Then they gave us this doji candle where it rallied above it, came right back down, and then kind of settled. The rules for a doji is close above the doji, go up, close below the doji, go down. The reason why this doji matters is technically since we have this engulfing bar, this is a level. So I only look at candles and I only look at bars at levels. I don't look at bars in dead air because dead air bars don't mean anything to me. You're still in dead air. Now, as the 20 moving average is coming down, as you notice, the top of this particular candle, if we close above this candle, that actually puts us back above the 20 moving average, which for some individuals, that might mean something, but we have been kind of choppy, so it might not mean as much. But this could be some double resistance on somebody's computer where the top of this candle and the 20 moving at the same time. If we break through that and close above that, that might mean something. So now we have a couple of levels. We're looking at the top of this candle, the bottom of this candle, and then we're looking at the top of this candle and the bottom of this candle. And we're also looking at this red candle. All right. So I've been explaining to you guys that anytime something tries to break through and it doesn't break through a level, you want it to react and move away from that level quickly. Because what happens is you need to identify if was that just a support level and it's bouncing, or is it just somebody trying to kick the door down, they're just backing up further so they can get a running start and drop it back down. In this situation, we're below the 20 on the weekly, we're below the 20 on the daily, we're below every indicator. We're technically in a bearish territory right now. Okay. So as you see, head faked you on Monday. No, well, yeah, my bad. This was Monday. This was Tuesday. And as you see on Wednesday, it didn't give you anything. It dipped its head down there, but it didn't give you a close above this level for this candle, and it didn't give you a close below this level for this candle. So you're in dead air. All right. So let's just watch. So none of the levels have changed. These levels still matter. Watch this red level because it's going to come up soon. This red level still matters because it looks like everything's rejecting it. But if we wake up and we get through this and we get a close below 671.20, I'm telling you guys, more than likely the market's going to drop. Now, keep in mind, this is not financial. I am not trying to give you financial information. I'm telling you what the charts, how I read the charts. You can follow it, you cannot. We're pretty damn good at this, but this is not me telling you what to do. I'm just letting you know what the candles are saying and how you can read these charts. It's almost like the Matrix. I'm good at reading charts. All right. So check this out. You got this level. Above this level will be something positive because it puts you back over 20. A close above this will be okay because you still got that 20 in front of you. But then if we start to cook below here and we start to cook below here, now we have a major problem. We're probably going to run all the way down to the 662.39. Maybe not happening one day, but it's going to start that trigger. Okay, guys? So pay attention. Now, what they like to do sometimes, since it's playing with us, they sometimes like to gap it, meaning you wake up and you down 1.5%. And they trapped all these people trying to go long because they didn't know where the charts were. They didn't know what they were looking at. They trap them, and then now all those people are trying to sell to get it to flush down even further. All right, so let's look at the cues. So this is what makes it. This is why you look at every one of them. We have the same situation here. We have this huge engulfing candle, same situation. We didn't get a close above, we didn't get a close below, and then we have this doji candle right at the 20, right at the top of this candle. So now the rules are get above here, that's a good thing. Get below here, that means we're trying to head back down again. And then you have these double bottoms right here. Guys, it's really that simple. You can look at opens and you can look at closes. Closes mean a whole lot more. Opens are good if you know how to use them for break and retest, okay? But closes are important. Forget what it's doing intraday. You got to see where it closes. As of right now, it closes at 607, which is right in between here. All right. Now, we're going to IWM. We have the same candle. We have the same doji. We have everything is exactly the same, right? So we didn't close above. We didn't close below. We're sitting right on top of it, though. We're right on top of the bottom of this particular shooting star that matches up with this candle. We might gap below. Just pay attention to see exactly what happens. We might open, retest, and then drop, or we might open and never get a retest, and they just caught people. They just caught people, but we have been below the 20 moving average on the daily, and we're below the 20 moving average on the weekly. Let's see what the weekly is. And this is why you got to look at multiple time frames, and you got to look at multiple indexes and multiple things so you get a full picture. That's why we're trying to help you. We talked about this 20 moving average on the weekly. It rejected it. It never closed above. It just rejected it. So this is exactly why you need to know where those places are. Because we closed below it. This is a retest, and now it might be ready to cook down and go even further. But let's just see what the market does. Nothing we know what's going to happen. All we can do is recognize and see what's supposed to happen. And last but not least, you have the Dow Jones. Dow Jones gave us the same thing, gave us a nice little doji. We didn't close above it. We rejected it, blah, 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 boom. And then we have this low. But the difference is this one gave you an official close below that particular doji. So you have indexes sitting there, sitting there, sitting there. This one actually closed below. So now the question is, what makes the Dow Jones different than the other indexes? The Dow Jones has financials in it. So financials can move the Dow Jones fairly strong. Industrials and financials are what the Dow. Just like the Qs have tech, and the SPY has large cap, a little bit of everything. But the Dow, if financials are struggling, the Dow's going to struggle. So that lets me know when I see this out of the four indexes, the Dow, when I go to the canaries, I'm going to pay attention to the financials and figure out what's going on in that particular market. So let's get ready to go. So you got your four indexes. The Dow has confirmed down. The other ones are sitting right on top of it. We haven't gotten above any levels. We're just struggling and trying to catch people slipping. So we want to make sure we don't see no gap down or gap up. So let's just see what happens. All right. Now let's go to our canaries. So we can really break this all the way down, okay? Now, looking at this, okay, looking at this is EEM. This is small caps, emerging markets. So what we did do yesterday, we closed right at a level. We did not close above this level, but to be honest with you, you got the same. You got to close above this engulfing bar. You just got to close above it. 58.8367. So let me go ahead and close that out. And now the bar below it is the bar it has to hold. You want continuation, okay? You really want continuation. The reality is you probably want to get above this particular doji candle because that's the rule, the top of it, bottom of it. But at least you see some type of strength. Even though you're down below the 20 moving average on the weekly, I mean on the daily, you're still sitting right above the 20 moving average on the weekly. So there is some strength to this. Okay. There is some strength to this. Now, this is a huge candle, so you would like this weekly candle to close below it or close above it. But we'll see. Let's just, it's emerging market. So it moves the market. We're just looking at to create some type of narrative. All right, EFA. Now, EFA is an international large cap, right? It didn't give us anything. So look at this. You have this engulfing candle. Same thing occurred, but we never got a close above 99.41. As you look to the left, we closed at 99.22. We never got a close. Now we have this particular candle right here, which is a daily reversal back down that's trying to hold. So even today, it went up to 99.41 again. Didn't close above it, didn't even get above it this time. It just hit that level and it stopped. Now we start cooking and getting below this particular level, we will have a problem where now it's reversing back down. Now, the difference between EFA is similar to the SPY versus the IWM. EFA is the SPY, while EEM is like IWM. It's small caps for international. So emerging market stuff like that. This means more. I'm gonna be honest with you. EFA means more. Sometimes EEM can kind of give you a clue of what might be happening. But EFA, if this is moving, this is what's really moving the market. Is going to impact us as well. So pay attention. We start getting below 98.45 and close below that. That might trigger us heading back down at least to the bottom of this particular candle. All right. Let's see what else is going on. Okay, gold. Gold's doing what it's doing. Bounce, boom, 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 confirmation. Stay above the 20, but right now, as of right now, gold is doing what it's supposed to do. It looks like it's rallying up. Did it close this gap as of yet? Not yet. It might close the gap, but gold's been kind of quiet. Gold's been kind of quiet. What we have next? Bitcoin. Okay. Now Bitcoin did bounce. It did hold this 20. It's still way below on the weekly. I'm not even gonna lie, it's still dramatically below. So it can go sideways and let this 20 moving average catch up to it. To either push it back down again or for it to recover. But right now, Bitcoin is kind of holding, it's not really rallying up. It's just kind of holding. But you got to stay above 39.28. You definitely want to stay above this 20 moving average. If Bitcoin starts to roll over, if we have some type of shake in the whole entire stock market, then there's a strong possibility that Bitcoin is going to get sold as well. So some people might take Bitcoin to pay for margin calls in other places, or Bitcoin might be the trigger. And Bitcoin might be the one that drops all the way down that makes the market sell off because now people have margin calls in Bitcoin. You don't know yet. You got to find out if the dog is chasing, if the dog is wagging the tail, or is the tail wagging the dog. We'll see. We'll just follow it. Right now, Bitcoin is not the short. It's something to watch, but it's not a short if you're trying to get a little short-term move. But for the overall trend, it may be you're just waiting for an entry level. IYT. So let's look at this closely. So we've been oversold, right? We oversold. This was the huge candle right here, right? Huge candle, huge candle. So that's why we have a line at the bottom of this particular candle. This is the drop down candle. What happened here was it came all the way down to support, touched the monthly level, and then rallied all the way back up. So it rejected the low of this drop down high volume candle. Then the next day, we never got above anywhere that's going to tell us that we reversed back up, but we also made sure that we did, oh, my bad. We did close below that particular level on yesterday. Yesterday, this candle closed below the bottom of this particular level. This is IYT. These are transports. The Dow Jones has transports. So these are like, this is telling you what the economy is doing. It's telling you everything about the economy. If the boats, the trains, the planes are transporting stuff, then this will be up. If they're having struggles or there's some type of stagflation or something going on in the market, this is going to struggle. And as you see, that downward move continued. It looked like we down 2.3337. So it closed below it, it stayed below it, and now it's just creeping its way on down. Be careful. Transports tell you a whole lot about just the economy and if there's some struggle. So right now, the Dow Jones is telling us transports, industrials and financials, something's going on in that particular location, which is normally the economy. Forget the tech stuff. I'm talking about the economy. So we'll get to it. We'll get to it. RSP. Now, RSP is a broad market, meaning everything is weighted equally. Carvana is weighted as equal as Apple. So that means if RSP is going up or down, that means in general, everything is going up, and in general, everything is going down. Where the SPY and the Qs pretty much tell you large caps are going up or down because that's what moves it. Everything's weighted according to the cap size, how big is the company. If the company's bigger, it'll move the market more. If the company's smaller, it'll move the market less. RSP is not like that. Everything can move the market at the same time. So we have an engulfing candle here, engulfing candle here, right? So let me go ahead and put my line right there. My bad. So when you look at this one, we have two of them. We have two engulfing candles. Now, if you see this bigger black one right here, I'm gonna show it to you real quick once I finish doing this. You see this black one and this black one right here? I'm gonna show you on the weekly. That's this huge candle right here. And now we're sitting right on top of this 20 moving average on a weekly. This is a weekly candle, right? So on a weekly candle, you're looking for a daily close below there, but you also got to pay attention to the 20 moving average right here. If we get below all of this and do all of that, now we have a problem because this candle right here, we're breaching that candle. So let's see what happens. Have we breached that candle? We never got above this candle, but now today we're sitting right on top of this bottom of this big weekly candle right here. So if they gap it down and they get to ripping, we have a problem because now once we get a close below this level, that gives you a confirmation on this big, huge weekly candle. And if we get below the red, that puts us below the 20 moving average on the 20 moving average on the weekly. That means now the SPY is below it and the broad market equal weighted is below the 20 moving average on the weekly. If we close the weekly below this, now we have some problems. Okay. So I'm just giving you levels to pay attention to. Now keep in mind, these levels, we can bounce off of these levels too. These are levels that mean something. It ain't just for us to look for it to break through. That might be the level it bounces off of. So just pay attention, okay? But these are levels that you want to make sure you know. What we got next? SMH. Now, SMH is surprising. So SMH has been choppy though. So you got to recognize when something's moving up, is it in a range or is it actually moving up on a trend? Now that I'm looking at this particular S&P 500 right here, this kind of went up, went down, went up, went down, went up. This has gotten kind of choppy. The trend is not really up or down, it's just choppy, but it did hold this particular previous all-time high level and it bounced right off of it. So that's a good thing. Now it's about to attack a certain area where it's the 20 moving average on the daily, as well as the weekly reversal that might have some type of resistance around this area. If it's trying to go back down again, this is the area where it should resist. Now you want to stay above 392.45. If we break below that, then it might be trying to get right back below this particular high volume candle, and we might run that candle right back down again. But that was a high value buying candle. The reason why we have to hold this level is because you see how much volume came in that day. That means every single buyer that came in that particular day, if we get to the low of that particular candle, that green candle of those buyers can easily turn and become red candles, heavy sellers, because now we're below a level where they got in and the rest of the market is dropping. They don't want to be in the market if we're going to drop even lower. Right now, these people are profitable. They don't want to turn a green trade into a red trade. So that's why you got to know what a high volume is. You got to know where the levels are because it matches levels and it matches high volume candle bars. That's what makes it so important. All right. So we got to stay above this. This is going to be a candle. This is a location because you look at it. Bang, 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 bang. You got 4 different touches on the daily at that same level. If we break below that and it was a high volume area. Once again, this is high volume as well. This is a high volume candle. This is a high volume candle. And we break below both of those, we got some problems. We have some problems. TLT. Now, TLT, let me tell you the operations of TLT. So TLT is a situation where if TLT goes up, that means interest rates are dropping. If TLT goes down, that means interest rates are rising. So right now, interest rates are rising according to TLT, right? With TLT dropping and going below particular levels, major levels, it gap. This is what I'm talking about when it gap. It gap through it to catch people slipping. Now it's oversold right now. But this is the problem. When TLT goes down, another thing is traditionally bonds are a safe haven. But if the stock market and bonds are going down together, which we've seen before, where do you hide? Normally you hide into the commodity space or the dollar. Now, what we're going to do is we're going to see exactly what the dollar's doing, what commodities are doing, to see if we see exactly that situation, which is a dangerous situation because there's nowhere to hide if you don't have anybody directing you. Sometimes commodity is the best play. Sometimes the dollar is the best play. The dollar might not move a lot, but sometimes being in cash is way more is better. Being in cash is better than being in anything. Because if the whole entire market is dropping, you'd rather just hold on to what you got. So we already saw gold is moving on the way up, right? So TLT is saying, I'm not part of the safe haven. So bonds are not something people are buying. So gold is something that people are buying. And we'll get to I think the dollar is next because it's the T. I go in alphabetical order. All right, here we go. Here we go. Now we got a story. Now this is oil. We know oil's been rallying. It gave us this huge engulfing candle on Monday. Huge. Head fake some people, kind of scared some people, is overbought, blah, 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 blah. But it never reversed back down. Then we created this line at the top and at the bottom. And then on Tuesday, oh man, it scared people. Oh man, oil about to reverse, blah, 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 blah. It opened here, dropped down here, and nope, and rallied right back up again. High volume, 1, 2, 3, 4, 5, 6, 7, 8. You got 8 days of high volume on oil. And 7 of those 8 days are green. I don't know what more to tell you. The trend is obviously telling you what's going on. All this was a head fake to catch people slipping to get into positions. So then when you get this hammer candle, which is the opposite of a shooting star, a hammer candle at the right level, the rules are below here is a problem, back above here back above here is a trigger. We literally closed today above 107.58. Let me shrink it down a little bit more so that for those of you guys that might be watching this on your cell phone, let me go ahead. I'm waiting for it to fix itself. Here we go. Okay, there we go. You see this candle? This candle just closed. Today we just closed above 107.56. We closed at 108.05. With this happening, this is letting me know that we might have another rally back up to go back to the top of this particular candle because how it reacted, and then we got to close above this candle. That's very, very, very important. So you might wake up tomorrow, oil's going to take off and oil's going to rise. Matter of fact, let me see if I can see in the aftermarket to see if anything's going on with oil with that close. Oh, I see. I told you. These blue lines is what. Oh, here we go. This is it right here. This shaded area, that's telling you what's going on in the aftermarket. Absolutely. Now, this only closed at 8 o'clock, so I don't know what's going on now. But as of the close of yesterday, this thing took off and it rocketed. It took off and it rocketed. It went from 108, 107 to 113. So exactly what I'm telling you guys, with that close right there, it's taking off and rallying. You might wake up tomorrow, oil be up 5, 6, 7, 8, 10% overnight. So pay attention to that. So let's create a narrative. Oil is a commodity. Gold is a commodity. Treasuries are drop. Treasuries are not a good investment. If stocks start to roll back over again, they're not a good investment. So where do you hide? You hide in the commodities. The only thing left is to see if the dollar is following this. Don't know yet. Let's get to it. But this is pretty much how it works. The dollar. Okay, boom. Here we go. The dollar. Okay, confirmation. The dollar closed above 27.49. And let me erase this. If you get back below, and it's above on the 20 on the daily. So that means short-term trend is up. Let me see the weekly. Ooh, did we close above? We was talking about this. Did we close above the weekly 20? The weekly 20 is 27.54. 27.55 is the close. Boom, we officially got above the weekly 20. So we're above the weekly 20 and we're above the daily 20, which means we are technically bullish in both situations. Now you have this huge gap right here. It might try to close this gap at 27.81, but let's see. So we got oil and we have the dollar. Let's see if the dollar is doing anything in the aftermarket. Let me see if there's doing anything. Did it shoot up like it's supposed to? Oh, once again, guys, we are extremely good. Please subscribe. Please subscribe. I'm going to teach you some stuff and I'm going to show you some stuff. Look at it. Bam. Look what the dollar did. When it opened back up again, it shot up because you got the confirmation that you're looking for on the weekly and the confirmation you're looking for on the daily. Look at this. The dollar is rocketing now. So now the dollar's going up, oil is going up, treasury's going down, stock market. Let me see what the stock market doing. I don't even know the stock market. I didn't even look at the stock market. Is it doing anything in the aftermarket? Uh-oh, yeah. Now see now this, we're back below the red. Look. I'm sorry, guys. I'm doing all this in real time. So you remember that red line I talked about on the SPY? Where we can't get below this red line because that's from December 12th, December 17th. Look at it. According to the aftermarket, we're below that. We're right at that level, sitting right on. You might wake up and I just said it might gap down. I literally just said the market might have to gap down below these levels to catch people and trap them. This is what it's doing. It closed here at 676. We already down at 670. Okay. You are at the right place, y'all. Please subscribe. I promise you. I hope you feel the energy. I hope you feel like, yo, I need to listen to these guys. Here we go. All right, let's go back to the canaries. So now we got an issue. Let's talk about the dollar. And it was on high volume. It moved on high volume. This is high volume right here. Daily. Yeah, that was high volume. So what is it telling us, guys? Traditionally, this is an inflation play. So traditionally, inflation is counteracted with high interest rates, right? So with high interest rates, you can take you can kind of like reduce the amount of money that's in the system, which means prices will eventually go down. So they raise interest rates to combat inflation, which kind of can pause the market, and then trying to get everything on order. But the problem in this situation, we've seen this before. I'm not going to tell you what this is looking like, but this is looking like 2007, 2008. So what happens if the market is crashing, interest rates are high, and commodities are going up? The reason why you cannot, you can, but you shouldn't. If commodities like oil and gold and all these commodities are going up, the prices of those particular products are going up. So you telling me the price of goods and services are going up at the same time interest rates are high? That means you can't pay for what you want, and you also don't want to borrow to pay for what you want because the interest rate is so dang high, you're getting hit on both ends. So you can't pay for the stuff and you can't pay for the stuff on credit because interest rates are so high. This would be definitely an issue that people definitely need to look into. All right. So we're going to pay attention to this. If the dollar keeps going up, now the dollar only helps you when you're talking about international exchanges. It doesn't help you the dollar does not help you at the gas tank. The dollar does not help you at the grocery store because we work on the dollar. We make our money on the dollar, so we don't see the difference. Now, if you was trying to take your dollar and go to another country and the dollar's rising, then yeah, you're going to make money. But most people are domestic spenders. That's just the fact. Now, businesses and very wealthy people, they like when the dollar goes up. So they look at it like this. If inflation is rising in the United States, I'll just go ahead and buy my plane in Brazil or buy my plane in another country because the dollar's so strong compared to that country. I'm not going to buy it in my own location because my country, inflation is skyrocketing. So we're in a tough situation. I'm not calling this 2007, 2008. I'm just saying we've seen this before, and where interest rates are high, banks can't lend, and people can't pay for goods. That's a problem. All right, let's go to the next one, guys. I'm just telling you to watch out. Okay, here we go. These are the not engineer energy stocks. Bounced off the 20, closed above 56, 58. Boom. It's following. Everything's confirming. Oil should be going up because now this closed above, oil closed above a level. Oil look like it's gonna be the play maybe over the next day or two. I'm curious to see what oil does overnight, guys. I'm not even gonna lie. I won't look at the futures as of yet, but I'll check it out. I might look at it when we get off of here, but Oh, look like it's about to take off. It gave you the confirmation that you're looking for. Okay. Now financial. Oh, snap. Do y'all see this? You see this red line? That's why I make it red. That's a problem. We just closed below that. All right, let me see what's going on. Let me see what's going on. I'm sorry. I know I got quiet, but there were some levels in here that we did not want to get below. You see this to the left? Boom, boom. This is a level right here we did not want to get below. Once we get below that, we're going to have a big slide. This red is not something we want to get below. Oh man, we are below that level now. So, okay, guys. I thought financials could try to fight it, but it won't fight it. So now the financials are struggling. Banks are struggling. They're struggling. Let me look at JP Morgan real quick and I'll come back to this. I always look at JP Morgan with banks. Yeah, it's dropping, dropping. It rejected this particular previous all-time high and bounced off of it. But if we wake up tomorrow and it's right back down through there, that's going to be a problem. XLF, let me go back to it. So, guys, you got a confirmation. It closed at 49.64. It finally closed below this 49.72. Um, it couldn't get a bounce. It couldn't do anything. Yeah, this is something to watch out for. If the banks are gonna struggle like this, guys, it's hard for the market to go up. On the weekly, yeah, we below. Look at this. Look at these. This is a major level. You see this bang, 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 three of them. We just closed right below it. We're below it. And you see that slide on the weekly? Yeah, we have a major problem. So financials are going to pull. That means that in the Dow Jones confirmed it. I saw that from earlier. I didn't even get to the financials until now. The Dow Jones confirmed it. Commodities are going up. The bond market, TLT, confirmed it. Banks are struggling right now. And if banks were doing stupid things and over leveraging, then if stuff starts to drop and they start to get into stagflation type of situation, um, you may see some banks that might actually technically be in some problems. We need some bouncing going on. We need something. But you might see some banks in some real precarious situations where they're not lending and they got loans out there. They got bad loans out there. Yeah, yeah. So let's just watch it. Hope you guys have a good one. Please subscribe. I put the Discord in the description. If you want to join, check it out. See our full report on everything. Please check it out. It's a great report. The people that use it, they love it. And they only want to trade without it. They just want to know the levels each day and they have clarity about what's going on. Well, have a blessed day. Talk to you guys another time and let's keep it cooking. Let's see what happens tomorrow, okay? Bye. Have a good one.